We are going to talk about projected financial statements, in particular, a projected income statement. We're going to take your year-to-date results and we're going to fill in the blanks so we can get a good idea of what the calendar year or the fiscal year is going to look like for the particular business that you are running. So let's dive into this. Projected financials is taking your year-to-date results and ultimately filling in the blanks for the rest of the year. You want to get an idea of what your calendar year, your physical year is going to look like. So you're going to take your revenue and use your best available information, data, sales budgets, whatever the inputs are on how you generate revenue, and fill those in to ultimately get a projected revenue number. You're going to do the same thing with expenses. You're going to take your year-to-date expenses and fill in the blanks, whether it's salary, whether that's licenses, whether that's cost of goods sold, whatever it is, you're going to take your best available inputs, your best available information, and try to fill in those blanks to get projected expenses to ultimately get your projected net income for the year. Projected revenue. This is where you want to take your year-to-date results, as we talked about before, and then fill in the blanks for the rest of the year. So what are those blanks? This is where you really need to talk to your sales team, reference your sales budget, look at what you've done year to date. What are your inputs that are creating revenue? Is it contractual revenue? We can just reference a contract to get an idea of how much revenue you're going to generate. Are you selling widgets? How many widgets are you anticipating selling? Do you have a sales forecast? What are the metrics behind the actual sale? So you want to take that information and ultimately make your best assumptions to figure out what revenue is going to be like for the rest of the year. Sometimes revenue is generated from assets. If you have assets under management, what is driving the revenue? That's what you want to find out. And once you find that out, you want to make your best assumptions on what you think you're going to sell for the rest of the year to determine what you think projected revenue is going to look like for the entire year. Expenses, same concept. We're going to look at our year-to-date results and we're going to fill in the blanks. Expenses are a little different. Some of these are going to be completely known. Say salaries, you know what someone's salary is going to be for the rest of the year. Others might be derived of revenue, like bonuses and commissions. So you have those inputs that can help you figure out what those expenses are. So for example, salaries. If you know somebody's making $100,000 for the year, you can easily project that out for the rest of the year. If you know they're going to get a raise, you want to factor that in as well. Payroll taxes. These are things that are derived from salary, bonuses, commissions, etc. So you have 6.2% for Social Security up to $160,000, and you have 1.45% for Medicare. Now there's other things like commissions that I mentioned. They are going to be tied to revenue. So if somebody's getting paid a commission, and if they're selling $100,000 worth of goods and they earn a 10% commission, if you've assumed $100,000 in revenue, then you can assume $10,000 or 10% of that is going to be a commission expense. Then you'll have other items like leases and rent. You know what those are. You can reference the lease schedule. If the rent's going to be the same for the rest of the year, you just fill that in. If the lease is going to increase in the next month or so, you can factor that in as well. Software licenses, same concept. If you've paid for your software licenses for 12 months, and you're amortizing it over 12 months, you know what that expense is. You can fill in all those gaps. So now that we have our projected revenue, our projected expenses, and our projected net income, why is that helpful? What are some reasons why you would even want to do this? Let's just rattle off a couple, and you can see how projected financials can be extremely helpful. One, tax planning. You can project your net income. You have a better sense of what taxes you should be paying. That way you're not underpaying. That way you're not overpaying. Budgeting. You're getting into the budgeting season and you don't have the full end of the year results. If you have projected results, you can use that as your base to then start building out your budget for next year. Bonuses and profit sharing. A lot of time bonuses are going to be tied to results. So if you know what your net income, you know what your revenue is, you can make good assumptions related to bonus accruals. So what's the difference between projections and run rate? Are they the same thing? No, they're very similar concepts, but they're not the exact same thing. Projections, you're really trying to fill in the gap for the calendar or physical year. So if you're in August, you're trying to figure out, hey, what are my results going to look like till the end of December if I'm on a calendar year? Run rate, I have the same August results. I want to take August and then I want to run that out 12 months to the end of July of the following year because I want to know where the business currently is and then what is it looking like 12 months out? What on a run rate basis, This is where you hear run rate. On a run rate basis, what does my business look like? That's different from projecting out a particular year. So projections, at the end of the day, you're making some guesses. You do not have perfect information. You want to balance paralysis by analysis versus putting together the best information you have available to make the best decisions based upon those projected financials. So you don't want to get too nitty gritty where you just never get them done versus you don't want them to be complete trash and unreliable. There's a healthy balance when pulling projections together. It takes a little bit of a time to really balance the art versus the science when pulling together projected financials. Now, I hope this gave you some summary information related to those. Next, we're going to go through revenue. After that, it's going to be expenses. So stay tuned for the next couple videos related to projected financials. Hope you have a good rest of the day. Take care. Goodbye. And I'll see you in the next video.